Ladies and gentlemen, today we witness a financial moment that will be remembered in history. Silver has surged past $100, breaking barriers that many thought were untouchable. The news from Shanghai has set global markets on edge, and yes, the banksters, the very institutions that have long controlled the flow of money, are now in a state of panic. But let me tell you this, moments like these are not to be feared. They are to be seized. Silver has just shattered a barrier that many thought would take decades to reach. Crossing the $100 mark per ounce is more than a number. It is a seismic signal to the world of finance that the rules are changing. Investors, traders, and even casual observers are watching in awe as this precious metal, long considered a safe haven and a hedge against uncertainty, surges with a force few anticipated. The excitement isn't just in the price itself, it's in what the price represents. Confidence in tangible assets, a renewed focus on global supply constraints, and a stark reminder that markets can defy conventional expectations. You might be asking, why now? Why silver? The answer lies in a combination of tightening supply chains, surging demand from industrial and technological sectors, and speculative interest that has gathered unprecedented momentum. Every tick upward on the silver chart echoes across trading floors, sending ripples that are impossible to ignore. For decades, analysts have debated whether silver could ever rival gold in terms of market attention. And now, finally, the metal is demanding the spotlight. When silver broke $100, it wasn't just a fleeting spike, it was a statement. Market participants, from institutional investors to private traders, are recalibrating their strategies, asking themselves which positions to hold, which to adjust, and how to navigate the sudden volatility. The $100 milestone acts like a magnet, drawing attention, scrutiny, and opportunity all at once. Those who act decisively can ride the wave. Those who hesitate risk being left behind as momentum accelerates. Even beyond the immediate financial implications, there is a psychological impact. A metal long regarded as secondary in the precious metals hierarchy has now captured imaginations and headlines. Every investor, every observer, and every strategist is forced to ask themselves, are we ready to adapt, or will we cling to old assumptions? This milestone is a wake-up call, a reminder that in markets, fortune favors the alert and the prepared. The surge in silver is telling us something bigger than itself. It's signaling the potential for transformative wealth shifts and revealing that opportunity often appears when least expected. If you've been waiting for a sign to pay attention to markets, to diversify, or to act decisively, this is it. The numbers on the screen are more than digits. They are a challenge, an invitation, and a call to action for those willing to see beyond fear and embrace possibility. The surge in silver prices isn't happening in isolation. It is being driven by a storm of activity originating from Shanghai, one of the world's most influential trading hubs. The city's markets have long been a barometer of global economic and sentiment. And when trading floors in Shanghai began showing unprecedented buying momentum, the rest of the world took notice almost instantly. Investors in New York, London, and beyond watched as demand intensified. Sending prices soaring higher than analysts had predicted, the magnitude of the activity is remarkable. Contracts are being executed at a pace and volume that signals not just speculation, but a fundamental shift in market behavior. When Shanghai moves, the global markets respond, and this time the response has been dramatic. What's happening in Shanghai is more than simple trading. It is a confluence of strategic positioning, industrial demand, and investor psychology. Manufacturers are stockpiling silver for industrial applications, especially in electronics, solar technology, and emerging green energy sectors. At the same time, hedge funds and individual investors are entering positions with unprecedented urgency, sensing an opportunity to ride a wave that could redefine portfolio strategies for years to come. Each surge in buying activity adds fuel to the momentum, creating a feedback loop that accelerates prices further. For those watching carefully, it is a live demonstration of market dynamics in motion, a reminder that global markets are deeply interconnected and that local decisions in one city can have worldwide consequences within seconds. The Shanghai market's influence extends beyond numbers. It is shaping sentiment and sparking reactions from governments, banks, and trading institutions. Analysts are scrambling to assess how sustained this surge can be. While investors must quickly decide whether to hold, sell, or expand their positions, the tension on trading floors is palpable and the stakes are higher than ever. This is a kind of market event that tests strategy, courage, and timing. For the proactive, this is an invitation to understand patterns, anticipate shifts, and position oneself at the forefront of change. The excitement emanating from Shanghai reminds us that markets are living ecosystems, constantly reacting to supply, demand, and perception. The surge in silver prices is more than just a headline. It is a signal to pay attention. to think strategically and to recognize that opportunities often emerge where others see only chaos. Every tick of the silver price is a heartbeat of the global economy, and those who notice it, who act with insight and precision, stand to gain not just financially, but in knowledge, foresight, and confidence. As silver surges past $100, a wave of unease has rippled through major financial institutions, creating what some are calling a bankster panic. The very players who have long dictated the flow of capital, relied on hedging strategies, and controlled market sentiment are now scrambling to adjust their positions. When a traditionally stable asset suddenly accelerates beyond expectations, it forces banks, funds, and large-scale traders to rethink their risk models in real time. Reports from trading floors indicate frantic activity, with portfolios being rebalanced, stop losses triggered, and margin calls demanding immediate attention. The usual sense of control that these institutions operate under is suddenly disrupted, and the message is clear: even the most sophisticated systems are vulnerable to unexpected market surges. The panic is fueled not only by price movement, but by the speed at which momentum has grown. Silver's climb is relentless, and each tick higher sends a message to banks that their assumptions are being challenged. Orders that were once considered safe are now exposed, and strategies built on decades of historical patterns are being tested against an entirely new reality. This is a rare moment when traditional power structures feel the pressure of markets, forces beyond their control. It is an unusual sight. Institutions that normally set the tone are forced to react rather than lead, highlighting how volatility can level the playing field for those prepared to move decisively. Investors watching the scene unfold can glean valuable lessons. Panic in the financial sector creates openings for informed, courageous individuals who understand the dynamics at play. As banks adjust positions, liquidity shifts, and market opportunities emerge. Being alert to these changes and willing to act strategically allows investors to navigate a landscape that even seasoned professionals are finding unpredictable. What some perceive as chaos is, in fact, a signal, an invitation to approach the market with insight, to recognize patterns, and to seize advantage where hesitation prevails. The spectacle of banksters in panic is also a reminder of the limits of centralized control in a globalized economy. No institution, regardless of size or influence, is immune to market disruptions when momentum and investor sentiment align. In unexpected ways, every sudden spike in price is both a challenge and a clue, a challenge to conventional thinking and a clue for those ready to anticipate shifts. For those willing to observe carefully, the scramble of the banks is not a warning to retreat, but a motivation to act, to learn, and to stake a claim in a market that is moving faster than ever before. As silver breaks the $100 barrier, investors across the globe are seeing an unprecedented wave of opportunity, a moment that can redefine portfolios and reshape financial strategies. This is not a minor fluctuation, it is a seismic shift that offers those who are prepared a chance to capitalize on momentum that has been decades in the making. Opportunities like this do not appear every day, and when they do, hesitation can be costly. Savvy investors are recognizing that the surge in silver represents more than a temporary spike. It is a signal of underlying demand, market recalibration, and the potential for significant returns. The surge has caught the attention of individual traders, hedge funds, and institutional players alike. Each is analyzing how to position themselves to benefit from the rapidly rising prices. Some are entering long positions, betting on continued momentum, while others are using options and derivatives to leverage their exposure without overextending risk. The key insight here is not merely to participate, but to act strategically. With awareness of both timing and market behavior, history has shown that those who hesitate in moments of rapid growth often miss the most significant gains. Those who act decisively can ride the wave. Those who hesitate risk being left behind as momentum accelerates. Even beyond the immediate financial implications, there is a psychological impact. A metal long regarded as secondary in the precious metals hierarchy has now captured imaginations and headlines. Every investor, every observer, and every strategist is forced to ask themselves, are we ready to adapt, or will we cling to old assumptions? This milestone is a wake-up call, a reminder that in markets, fortune favors the alert and the prepared. The surge in silver is telling us something bigger than itself. It's signaling the potential for transformative wealth shifts and revealing that opportunity often appears when least expected. If you've been waiting for a sign to pay attention to markets, to diversify, or to act decisively, this is it. The numbers on the screen are more than digits. They are a challenge, an invitation, and a call to action for those willing to see beyond fear and embrace possibility. The surge in silver prices isn't happening in isolation. It is being driven by a storm of activity originating from Shanghai, one of the world's most influential trading hubs. The city's markets have long been a barometer of global economic and sentiment. And when trading floors in Shanghai began showing unprecedented buying momentum, the rest of the world took notice almost instantly. Investors in New York, London, and beyond watched as demand intensified, sending prices soaring higher than analysts had predicted. The magnitude of the activity is remarkable. Contracts are being executed at a pace and volume that signals not just speculation, but a fundamental shift in market behavior. When Shanghai moves, the global markets respond, and this time the response has been dramatic. For those who thrive under pressure, this is precisely the moment to sharpen focus, analyze trends, and take calculated action. Each spike, each fluctuation, is not random, it is a signal, a clue about where opportunity and risk intersect, and a reminder that those who prepare are those who profit. The rapid climb in silver has intensified the stakes for all market participants. Margin calls, leverage positions, and trading algorithms are responding to the surge with lightning speed, amplifying volatility even further. While some may see this as chaos, those who understand market mechanics recognize it as a dynamic environment where insight and decisiveness pay dividends. Timing becomes critical. Even a few hours' delay in responding to market signals can mean the difference between capitalizing on the momentum and missing the ride entirely. In such moments, hesitation is costly, but informed action can be transformative. Volatility also highlights a deeper truth about markets. Risk and reward are inseparable, and the greatest opportunities often appear when uncertainty peaks. Investors who are willing to embrace volatility, study patterns, and act strategically are positioned to reap benefits far beyond the cautious approach. Each surge in price, each tremor in the market acts as a test of discipline and courage. It challenges conventional thinking and rewards those who can balance boldness with analysis. For the proactive investor, market swings are not threats. They are invitations to engage, learn, and capture value in real time. Moreover, volatility reveals the interconnectedness of global finance. Decisions in one region, like Shanghai, reverberate across continents, creating ripples that affect portfolios worldwide. Being alert to these shifts, understanding the forces behind them, and reacting with clarity and confidence allows investors to navigate even the most turbulent environments. The silver breakout also raises broader questions about how investors allocate resources in times of uncertainty. Precious metals have historically served as both a hedge and a safe haven. And the rapid climb of silver reinforces its role in preserving value against inflation and economic instability. Those who recognize these signals can position themselves to benefit not only from immediate price movements, but from long-term shifts in global economic trends. Timing, insight, and strategy are critical, and each day brings new opportunities for those willing to analyze data, anticipate trends, and act decisively. This surge is more than a financial headline. It is a wake-up call and a lesson in the power of observation, preparation, and informed action. The impact of silver reaching $100 is a reminder that economic shifts can happen quickly. But those who stay alert, study the forces at play, and adapt to emerging realities can transform potential disruption into opportunity. It underscores the truth that in global markets, knowledge, courage, and timing are as valuable as capital itself. Every analyst, investor, and strategist is now watching closely, recognizing that what unfolds from here could define market trends for years to come. So as the world watches Shanghai and the trembling Banksters, ask yourself, are you watching from the sidelines, or are you ready to step into the arena? Remember, fortune favors the informed, the bold, and the persistent. This is not just news. It is a challenge, a motivator, and an opportunity wrapped in a single headline. The silver surge demonstrates that while volatility can unsettle the unprepared, it can also create extraordinary opportunities for those ready to observe, adapt, and act decisively. Every spike in price is a pulse of possibility, a reminder that the market rewards insight, agility, and courage in equal measure. The historic surge in silver prices has implications that go far beyond the trading floor, sending shockwaves through global economics and signaling potential shifts in financial systems worldwide. Every tick upward is being analyzed by economists, strategists, and policymakers as they attempt to assess how this breakthrough will influence inflation, our hedges, our currency stability, and the broader precious metals market. When a commodity like silver crosses a psychological and financial milestone, such as $100 per ounce, it does more than affect traders. It challenges conventional assumptions about value, scarcity, and global demand. Observers are now forced to reconsider long-held beliefs about the balance between traditional assets, emerging markets, and industrial metals. Investors and governments alike are recalculating strategies in response to the rapid ascent of silver. Central banks that once relied on conventional hedging measures are taking note. While private investors are exploring ways to protect and grow wealth in this evolving landscape, the surge demonstrates that financial markets are not static, they are dynamic ecosystems influenced by global trends, technological demand, and human psychology. Every strategic move in response to this shift can have ripple effects across industries, currencies, and economies, highlighting that no market operates in isolation. The interdependence of local and global markets is clearer than ever. With Shanghai's momentum now shaping sentiment and decisions on multiple continents,